there's something. I did shower, I put deodorant on, but this chair, everybody assumed Paul Dunn didn't want to be here, but now it's not Paul Dunn anymore. So what is this?
It's Jason's, seat. Right, Jason?
Okay. Can I just? Good morning, Jason. Welcome. We've got a 45 minutes, which is meant to be a couple of minutes for each one of the panelists. These are the people who cannot speak without slides, apparently. I don't know what the story is with you people. But we will allow them to share their wisdom. The good thing about slides is we can remind you next year what you said this year. So you see, smart CEOs never, ever leave a paper trail of what they've said. So Jason, we want to, obviously talk about the PGMs and what you guys as the experts say. So can I put you on? You've got about 200 people in the room, and we've got over 100 people online. This is all PGM interested people, so over to you. Thank you.
Thanks a lot. Can you hear me okay?
Yeah, all good. Please proceed.
All good, okay. Okay, so thanks very much for the introduction. Good morning, everybody. Sorry, I can't be with you in person today. So yes, as you said, my name is Jason Holden. I'm analyst at S&P Global Commodity Insights. I'll just sort of give our latest view on the mine supply, some of the mining costs, before I hand over to the team over there, who will continue with the bigger picture. So starting with supply, last year, sort of slight decrease in market supply overall, platinum down to around 600,000 ounces, small decreases in South African production, Zimbabwe as well, recorded the decline from its peak back in 2023 to around 509,000 ounces. That's partly due to the reductions in Unki mine, gains at Zimplats.
Jason, can I just sort of interrupt? Are you sharing a slide or not? Sorry, I'm the...
Can you not see it? Oh, sorry.
Okay, thank you. No, I thought for a moment...
Sorry. I thought I'd done it. Okay.
Thanks,
can you see now?
Yeah.
Yeah? Okay,
thank
sorry.
you. Thank you.
Makes it easier, right?
Yeah.
Okay. Yeah, so as I say, declines in North America around 10,000 ounces. That's from, as we discussed, or as you discussed earlier, some of the cutbacks at the North American operations, Stillwater, some of the primary nickel mines over there, after restructuring, some of the cost-cutting measures. Now, Russian production, it's hard to get the information these days, but forecasting relatively flat across both platinum and palladium, obviously despite the geopolitical concerns there, some of the potential sanctions hanging in the air. If we look forward to 2025, definitely expecting more decline in palladium. Again, as you discussed this morning, Stillwater, the main producer there, seeing cuts. Now, platinum, this is a bit of a tricky one, obviously. We forecast a tiny rebound there. It's only 0.2% of the actual market, but as you'll see in the next couple of slides, we're still seeing many operations operating into or above the basket prices of some of their operations. So there is still a fair chance that some of these operations could be held back, pay some care maintenance, some more of the projects being pushed back into the future. Okay, so on this chart, the first chart here we've got is the 6E byproduct cost curve, and above that I've plotted what we expect consensus basket price to be 2025. So we're looking at around 20 to 30% of the industry operating at a loss in these figures. So a large proportion of that still South Africa, and then of course some of the higher cost nickel operations in North America. So Tariff division, for example, as well. Sudbury. Again, the real on the cost curve there due to its high nickel content and economies of scale. If we were to consider looking forward to the average cost this year on a platinum ounces perspective, we're forecasting a rising cost of about 4.6%. So comparing that to some of the consensus prices we're seeing, platinum prices expecting to improve about 7%, about $1,030 per ounce. A little bit higher, $30 higher than we're at today. Similar case for Palladium, expecting around 3% increase over the last year. So there is a bit of headroom there. Prices forecast to increase a bit faster than costs. I think there's still potential there for more of the older shafts to reduce production, perhaps some of the construction of new projects to be deferred. And as obviously discussed this morning, Stillwater mine, placing care and maintenance at the West mine and focusing production on Stillwater East. And focusing on keeping costs below the $1,000 per ounce for the 2E ounces basket. Again, South Africa, I think discussed this morning already, Mogalakwena project, estimating to reduce costs by 10 to 20% all in sustaining. So we're seeing some bit more headroom potentially this year with a combination of some of the cost improvements coming through and a bit of an increase in prices. So this little breakout chart on the left here, so that's just comparing South African costs compared to the global average. It's not really a surprise there, labour and energy being sort of the things that are higher compared to other countries. That's expected to maintain the same, but with some of the margins being squeezed this year, royalties, something we expect to drop a bit more. Okay, so moving on to costs, more breakdown in costs, and this is based on dollars per ton ore milled. So it's takes out the impact of some of the prices from byproduct, co-product costs. But as we see here, sort of the thing to pick out, I guess, is sustaining capital, something we've seen dropping over the last few years. And we can go into a bit more detail on the next slide, but this is something that companies have definitely been trying to reduce. That's something expecting to see to continue next year as some of the capital allocation measures come in to reduce costs overall in 2025. Okay. So, looking a bit more long term now, we've seen Capex reined in for both in terms of development, new projects, development Capex, sustaining Capex. Seen quite well here how that trend follows slightly behind 4E basket prices. So we expect capital expenditure to drop by about 26% from its peak there in 2023 to about 2.8 billion this year. The majority of that cutback is in sustaining Capex. But as we know, there's some fairly big projects still in the pipeline. Thinking Waterberg, for example, and that one, while prices are where they are, it's probably not high enough to incentivize new projects. So it's something we might see pushed back some more, or as I think they've discussed in their recent projects, something building up in stages. So reducing the outlay of Capex at the beginning until incentive prices are really there to bring them on. Now just to touch on exploration, I think this chart actually gives a good snapshot of the industry. At the beginning there, we see a steady ramp up exploration budgets up to 2008, when the blend price reached around $1,500 per ounce. Of course, you saw the financial crisis hit next year, overnight budgets halved again. But they actually rebounded quite well until about 2012, and then with a situation in South Africa that year, definitely a risk-off situation took over. Budgets never really hit the same level again over that period. But the last couple of years, we've seen a bit of an increase since the bottom there in 2017. And most of this budget is, the budget is exactly split between the major companies, the majors you've got over there, and the junior exploration companies. But both of these companies, shares, are both focusing on mine site, late stage operations. So there's not much greenfields. 7% exploration budget focused on greenfields, which is, makes sense, right? The prices where they are, people don't want to risk capital on greenfields, high risk exploration. And that's something that's shared across most metals actually at the moment. But just to pick out briefly, we've seen an increase outside of South Africa. So the yellow portion there is Australia. There in 2023 reached 21% of the exploration budget in Australia, and that's a lot to do with Chas mining projects over there, but also Australian-based companies, so Southern Platinum as well, making up a bit of a portion there, and just Latin American proportion, that is focused on Brazil and Bravo Mining's Looming project, and that's a late-stage development projects. So I guess, why does exploration matter really at the moment? There's plenty of resources around, as you heard, Anglo-American, 150 years worth of reserves and resources, so that, why do we care? I think it's a bit more about better high-quality projects. You've got plenty of mines that are high cost, deep, very high cost to run, but we have seen some of the exploration payoff. Some of this exploration here in the 2000s, got Flat Reef coming online. It's a high production, low cost operation. Potentially some others coming online in the future. So we know that it's going to take 16, 20 years time to bring on a mine. We're not really spending the money now. So,
Jason, my timer indicates that you've used your time. Yeah.
Okay, so I'll leave exploration. I'll bring up my last slide, and I don't need to read through it. It's there for you to read, but I'll hand back over to you. If I'm up to my 10 minutes, I'll be here to answer questions.
Thank you very much. So can we leave that slide up for a second so that people can just absorb that? Yeah. Wilma, can I ask you to go next?
Yep, absolutely.
Yeah,
Do you want me to stand
of course
up there?
you want to stand up there. And that timer is for you, ma'am.
It's for me, so I'll take notice of that. Thank you. Well, thank you very much for the opportunity to present here today. So let me just make sure I know how this clicker works, and I do. Right. So as we enter the second quarter of 2025, I think that the global economic and industrial background dashboard is littered with red, yellow indicators, and there is a space little indicator, green indicator around. That doesn't mean it's the direction of the demand or the direction of the supply, but it does mean that we're in a very cautionary stage. The confidence is fragile, and we have uncertainty, political uncertainty, we have regulatory uncertainty, and all of that plays a part in what we see is happening with the PGM industry, both on the supply side and on the demand side. So I wanted to spend a little bit of time, because Jason spoke about mine supply, and as Metals Focus, we certainly see that mine supply will decline on a 3E basis this year by 5%. But it's not the only supply component. There is a very large secondary component, which is creating quite a conundrum for the industry. 27% of this year, we're forecasting that 27% of supply will come from secondary sources. And I have a confession to make that since 2020, Metals Focus have been kicking the spent catalyst canisters down the forecast. Because what we have looked at is, when you consider the car park and the expectations, external expectations around the growth of the car park, new car sales, you come to a mathematically calculated deregistration number. So essentially what this chart on the left-hand side represents is what is technically available in a year as far as end-of-life vehicles is concerned. And that has been increasing. Yet, in reality, if you look at the chart on the right-hand side, we've seen that secondary supply, specifically from auto catalysts, have actually declined. And so that creates, it's not necessarily that forecasters are wrong, but it is certainly that there are new dynamics and changes around. So we are seeing that since COVID, people are driving second-hand cars for longer. We are seeing that because of the fact that they are driving their cars longer, they need parts. And so potentially we have scrapyards with vehicles, which they are not scrapping, they're not taking out everything, they're hoarding it. We also have, hope springs eternal. We saw Rhodium prices at $30,000. We saw Palladium at $3,500. So when you're in the position to hold on to these metals and wait for better prices, you potentially may be doing that. And there's another key conundrum or key shift that we've seen in recycling, and that is this move towards from west to east. So if we unpack the actual supply of catalyst, secondary supply of spent catalysts in the Western world, Europe and North America, that actually, my expectation is down. But we are seeing that it is growing in China. There has been huge investment in Chinese smelting capacity and recycling capacity, and that has significantly grown. But here's the crux. When metal is refined in China, they generally don't leave China. So that metal's not necessarily available for use or purchasable in the Western market. So what does that do? It creates tighter markets in the Western market from a lease rate perspective, from a liquidity perspective. So these are all new factors that the industry has had to contend with. So overarching in 2025, we are seeing that supply will decline. For secondary, we are expecting some recovery. We're constantly kicking that canister down the line, and we think that 2025, the vehicle should be there. The spent catalyst should come to market. So we're expecting a slight improvement in secondary supply, but we are certainly expecting that we'll see a continued decline in primary supply. At the same time, we're always also seeing some softer demand, mainly because we had massive expansion in glass, in chemicals, and they might not be repeated. China has gone through a process of security of self-sufficiency around chemicals and glass, and we might not see that repeated in 2025. That's not necessarily true for the longer term. But so in essence, though, on a 3E basis, we still see that this market this year will be almost 1 million ounces in deficit. But we can't talk about the three metals. We have to talk about the metals individually. So for platinum, for 2025, we see that we will continue to stay in deficit. And we believe that above ground stocks at around about 9.5 million ounces will be drawn down. And it offers around about 15 months worth of demand. So we're quite constructive about our view on platinum prices. We are forecasting an average of $998,000 for 2025, and we think that it could range anything from $900 to $1,200 during the course of this year. And as you can see, the tail end, we do believe that it will breach that $1,000, and it should start maintaining that level above $1,000. For palladium, we also continue to see this market in deficit, 380,000 ounce deficit for 2025, and we are seeing this 10.9 million ounce above ground stock also being drawn down. But at the same time, we know that longer term, there is a story to be told about palladium, and the CEOs pointed out. So on a long-term basis, we are for this year, we're bullish for the palladium price, but we're bearish towards the latter part. So we think that the metal can trade anything between $1,000 and $1,200. And we are expecting that the average would be around about $1,010 for 2025. Then rhodium. Again, we see the rhodium market in deficit. 74,000 ounces this year, And we are seeing a sub-1 million ounce above ground stock. We see 7 months worth of demand cover for rhodium. And that creates this volatility that we are expecting. So we have barn doors in terms of our range for rhodium. We think that the metal can trade anything between $4,000 to up to $7,000. And we're expecting to see this average out at around about $4,700 and $700 for the year. And so what I want to do in closing in my last minute, and I'm giving some extra time for Henk, is just to give a little bit of context for these prices, because they may seem a little bit on the bearish side. But if we take the historical prices and we convert them to real prices since 1996, then we certainly feel that palladium is undervalued. So this box plot shows you the different quartiles at where real prices were on average. And so we can see that platinum currently, where it is on the spot price today, is on the first quartile. And so if we look at palladium, that's slightly different. It's kind of about trading at the median in terms of long-term price averages on a real basis. And rhodium is at an historical high. And so we do believe that our forecasts are very much in line with what we see historically, and we certainly are, as you saw in your poll that you did, Bernard, this morning, we are very constructive about platinum. We believe that platinum should break out, maybe not this year. There are some overhangs that pushes the price back below $1,000 whenever it reaches that. But we do think it's undervalued, and in the longer term should be the metal to watch. While palladium, we believe, will continue to trade around this level, and it'll start losing some ground as we see electrification take a greater hold. And the similar, sisters in crime, rhodium and palladium, that will have an impact on both. And that concludes my presentation.
Thank you, Wilma. Thank you very much. Yeah, you can clap for anybody who gives you a range of 4,000 to 7,000 and call it a forecast. I mean, but now, in the light of the fact that we are no longer allowed to talk about diversity, Henk is not here because he's a Hollander. He's here because he's from Oxford. Okay, so you sneak in that way. Henk, SFA's views, or your own views?
I was here in 2023, and this week when I saw a couple of the companies in the industry, they said, please talk a bit more positive than in 2023.
Yes.
And what a day I've chosen. The CNU is falling over, and Trump announced war on the world yesterday. So we're going to talk a bit about that, because I think that's very important macro context. So I'm going to talk a bit about macro, then we're going to talk a bit about what we saw in 2023 and what has changed in 2025 in our view. Because of the limited time, I'm talking mainly about automotive, but I'm going to look a bit at hydrogen as well, and at the end I'll pull that all together. First of all, we use Oxford Economics, and these are the forecasts they had. There was already a bit of tariff baked in, but the reality is this is going to change. You should take this out of the PGM industry, take it out of the world, out of this room, and if you're a farmer, you run hotels, airline, you manufacture, you're consultants, you're going to be impacted by this. What he announced last night is absolutely massive. Currently, US import tariffs on average, 2.5%. He's pushing it to 20%, the highest since 1910. Nobody knows what's going to happen. There's boards everywhere and panic, so it's going to impact the PGM industry. But I do agree with Richard. If you're an industry that is so concentrated as we are, you're probably in a much stronger position than in widely diversified industries that are operating across the world. So we do have a strategic advantage, but this is going to impact the industry. So what changed from 23 to 2025? And I have to run through it quite quickly. BEV market share growth has been reduced, in a sense, the outlook for that. We also have a rapid increase in hybrid powertrains as an alternative if people don't want to buy a BEV. We still have too slow a charging infrastructure ramp up, and Trump is slowing that down further. We have positive for the PGM industry regulatory reviews. We're not pushing the CO2 targets as hard. Trump takes us a step further, in fact. He is taking the funding away of the institutions that measure CO2 in the world, to just not wanting to see the problem. He's dismantling the EPA. So these are indirectly positive for PGMs. What is probably a bit more negative, what we've seen in battery tech breakthroughs is quite spectacular. You might have seen BYD launch the first car that can charge at 1,000 kilowatts. That means 5 minutes, 400 kilometers charge. So the technology is ramping up quite quickly. We also had concerns in 23, will there be enough lithium, will there be enough nickel and cobalt? That is far less of a concern. We've gone overshooting there. There's too much of it around, in fact, and the prices are quite cheap. And then what is important, there are cheap BEV models being launched, not only from China, but also domestically. Renault is launching the 5 Series electric that will sell well because it's in the right price class. And you have seen China exporting their cars into the world. Luckily for now, though, that's 80% ICE that they're exporting. Hydrogen is not as good a story because we are seeing projects being taken off the table and kicked into the future. I think we all know Europe is now having to spend a lot more money on defense. There's a lot of a rights shift into politics. It will de-emphasize the greening of the world a bit, and let's push that a bit in the future and see if that problem actually can be dealt with a bit later. So I would agree that there is still an opportunity. It is just a bit further out than what we previously had in our models. And then finally, this is quite important, but all of them have positives and negatives. So damage to world growth from tariffs, fairly certain. We have to just see the extent of that. Will the OEMs fight for survival help the PGM industry? Will they, for example, like Porsche did, we're going to build more combustion engines for longer because we don't think we can sell our BEVs? Will the European politics collapse and provide consistent support for their combustion engine-based industries rather than pushing BEV targets harder than what they previously did? The EPA, which is the Environmental Protection Agency in America, is being dismantled. It is completely taken apart, involving all aspects of environmental protection. So the other side of that, though, the IRA is being attacked as well. The plan that supported the hydrogen industry, that's being taken off the table as well. So there's a plus and a minus. And then all of this brings lots of uncertainty. Can I still buy a car next year? Where's my next salary coming from? So consumer investors always sentiment overlays this all. So at the moment, Trump is the all-important theme for all of this. These are famous quotes of him, but there's hundreds of them. But they do actually are firmly stuck in his mind. And also he's got advisors behind him that are very much tariff-focused people that believe that it's going to solve America's problem. So, first of all, I had to pick a theme, and I've chosen automotive because it is the decider for the PGM industry in the next years ahead of where supply or demand will head. Palladium and Rhodium, horribly dependent on automotive developments. Platinum less so, but it's still an important driver of future demand. What you've heard is a lot of changes in powertrains coming. ICE was the traditional one. Call it 100% PGMs equivalent. Then we started to introduce mild hybrids. Those were the Toyota Priuses. There's a bit of a run over now into hybrids where the battery gets bigger and part of the drive you have is actually on the battery, short distances. We've had a big boom in plug-in hybrids. I bought one of the early ones. It is completely useless. But later ones are starting to work because you need to have a decent-sized battery to actually put the effort in to actually drive your car. And the next step in technology that is still a hybrid, but it's fundamentally different. You put a bigger battery in, a sizable battery, and your engine reacts as a generator. So it's not connected to your axle anymore. Again, the Americans go big in anything. The Dodge Ram, with this system coming out, has a V6 3.6-liter generator in the car. So there will still be PGMs. It's probably less because generators run at a very different engine point. And then finally is obviously the BEV side. There are no PGMs in battery electric vehicles, and those are being driven quite hard. So what a lot of forecasts then you do, you break up all these categories and have different weightings of hybrids, and you can see that, yes, there is increasing sales. These are global data numbers, and global data has forecasts from all the manufacturers. They have their production runs in, they have their model launches in over the next 5, 6, 8 years, and these are the numbers that they have. What you do have, though, is an option that will disappoint. And the reason is all those BEV sales were 2 out of 3 were driven by China in the Chinese market. They sold like cookies. What it needs to happen in the next few years is all that growth that global data is projecting should come from Europe, from US, and we've seen already there are tensions in those markets. So will those materialize? And if you have that opportunity, what would it mean for your future palladium demand forecast, where you have a base case, but what if that doesn't materialize? And it's quite a big impact. It doesn't seem large, but if you have 5% less EVs sold, that adds 500,000 ounces of palladium. If you have a 20% EV share, which is already higher than what we currently have, where it's about 14, 15%, you have 1 million ounces more palladium demand only 5 years from now. What I've added here that is often not in global data's forecast, the Chinese export explosion is happening. 80% is combustion engines. What if the solar panel effect they had when they made solar panels so cheap that everybody started outside of China buying solar panels because they were cheap? The Chinese cheap models could do something to the overall car sales volume growth. If you can sell a car for $12,000, $15,000 into South America, and the OEMs from the Western world can't hit 20 or 25, you will sell more cars. Compare it to South Africa. Would South Africa have the same volume of new car sales if it wasn't for the cheap Chinese cars coming into the country? Probably not, because the cars that are the alternatives are so much more expensive. So that is called the positive side that I'm trying to squeeze out of the story. I guess what it then does is you do get this 1 to 1.3 million ounce upside in palladium that could still materialize in a very uncertain world, because China will export itself out of trouble. So this is the summary, essentially. What we currently see, there's still a bit of platinum demand upside this year. A lot of it has to do, we think this is the peak of the Trimetal catalyst that's going to change next year. Palladium, we shouldn't forget that overall the EV share is still increasing also this year, despite the bad news you hear on Tesla. There's a lot of new models being launched in Europe, for example. So there is a bit of a decline in demand for palladium. So we think that pricing is not getting, these are 2025 price forecast. Rhodium is tighter. Automotive demand is weakening a bit. That's a reality check as well. So we do agree there is probably a very wide range in rhodium. So this is an average that we're giving here, but it is currently the Trump overlying theme. I wouldn't expect major price rises as long as that isn't actually settling into a certain economic outcome. Thanks very much.
Thank you, Henk. Thank you very much. So, Henk, the obvious question has to be, when you came here in 2023 and you were in a bad mood and you talked a lot of negative nonsense, is that why you were not invited in 2024?
I'm fairly sure it was.
And we'll do a poll of the audience to see if we should invite you now that you've come to your senses. I mean, you know, obviously settled in, got used to the bad weather in Oxford, feel better about life. And all those things, huh? Is that true?
Well, I think the themes then are still valid. We can put our heads in the sand and say BEVs are not going to happen. They're going to happen. They're going to progress. They're going to progress slower than expected. It's going to impact combustion engines. Are there offsetting factors? Absolutely. And I think compared to 2023, and I agree with Wilma, your recycling number is a big risk.
Yeah.
That is simply not coming through. We got some later data from China and the big push of recycled vehicles that came into the system in 2024, a lot of them didn't have a catalyst. They had been stripped beforehand. So your recycling cars were up in the order of 60%. The PGMs that were coming out of it was only up 20%. So there could well be a story there that helps to take that threat and push that further out in the future.
Jason, I want to get all three of you to comment on your, as a group of mad people, you take everything miners tell you, you accept it as the truth, you plug it into your supply numbers, and you are consistently wrong, if I believe Craig. Craig put out some slides that show you are consistently wrong. So can we talk about mine supply, primary supply? We spoke about recycling and secondary supply, and we were wrong there too. Are you over-optimistic by just adding up all the promises of the miners? Is that a built-in flaw in this current sort of way of thinking, Jason?
I think we're probably a bit more optimistic, but I think that's based on some of the consensus prices we're seeing coming through, and also based on what we've seen currently in first quarter reporting. So, I mean, anybody who says that estimating this kind of thing is easy has never done it, I guess, or selective memory. So we can always take what they say with a pinch of salt, and that's kind of what we've done this year for our estimates, but we still, I guess, we'll just have to see how the prices play out this year, and how many mines stay online, and how many more are put on care and maintenance if things don't improve.
Wilma, why are you always taking the bullshit from the miners and plug it into your numbers? When are you going to learn, young lady?
I mean, Bernard, I don't think we do necessarily. I think we have the privilege that most of the mines do actually give a lot of detail. But we take their guidance, we take their range, and then we apply, we apply a factor to that.
Do you?
We do.
Yeah,
we do. So why are we wrong? I mean, I think firstly, I would say you need to separate between our mine supply numbers and our secondary supply numbers. I would say our secondary supply numbers is wildly all over the place. We're a lot more solid on our mine supply numbers because the producers give us really good feedback or reporting. But, I think in essence, when you're a miner, you have to be optimistic about your output, and we do know that there's a very big fixed cost base, and how do you manage that is by producing more, and so that I said hope springs eternal. We have to trust the information that we get. We interrogate, we do downgrade it or upgrade it in some instances, but we certainly also have to take the specialist's word for what they say.
Okay. Miners have to be optimistic. There is a huge fixed cost component. We are incentivized to produce more. I take all of those points. And we'll later get to the projects, the people who tell us that they're going to build big mines in the bottom quartile, and we'll unpack that further. Henk, there's a question which came anonymous. To what degree will reductions in consumer subsidies in the US and Germany impact SFA's battery electric vehicle demand projections? Do you want to expand? This is in the space of
No, sure.
adjustments.
There was, and it's not even theoretical anymore, when Germany pulled the subsidies for EVs, they crashed. They came down quite hard, the numbers. There are other countries as well that are bringing up road taxes that had been removed for EVs, and they're bringing them back up. And in the Netherlands, for example, they're weight-based. Electric vehicles are heavy, so they're going to pay more road tax than an ICE vehicle in the future. So that will suppress sales. US is obviously quite clear as well. I think the biggest headline at the moment is everybody hates Elon Musk so much, and the Model Y is the best sold electric vehicle in the world. So if you hit that number, you're going to underperform. There is a bit of disruption in those called actual numbers, because he's launching the new Model Y, and what normally then happens, you retool the factories, and also people don't buy the old model, they wait for the new model. So it's a bit sharper down than others. But the other point to make is that he is losing market share very fast, because everybody can buy a very different model, where previously you were limited to the bulk of your options were Teslas. Nowadays, most manufacturers have a good alternative. And the one thing that we keeping in mind is you previously could only sell to the top line consumer because they were damn expensive vehicles. They're now coming in the market at 25, at 20,000 euros. So we're trying to be realistic. There will be more car sales. It's not going to come down, but there are offsetting factors to only that.
A few quick questions. I don't know who to ask this to, so Wilma, you sit next to me. Can I see if you want to answer that? Are we seeing a Dieselgate 2.0 in China at the moment? Could this be the catalyst we need? Is there something happening in China around
Yeah,
emission
I think
standards?
that's right, yeah, and I think it came up about a week ago at the Markets Day as well, around the investigations that's taking place around the China's 6 loadings, and there are a couple of test centres that are
Could
being
it be a
investigated.
catalyst for...
Can it be a catalyst? Yes, of course, absolutely. You know, I mean, I think that if China cracks down, if the catalyst have the correct loadings on, you know, there could be quite a significant increase in the demand on the ICE vehicles from this particular region.
Sure. Jason, there's a question for the panel. Can I start with you? It's from David Mackay. What is your understanding of potential US sanctions on Nornickel Palladium? My understanding was there was no tariffs on Russia at all. Where is this in the process and what is the potential impact? So David's question is about the tariffs and did it flow over to Norilsk nickel or not? Jason, do you have an answer to that?
As far as I'm aware, it's not flowing over to Norilsk at the moment. I mean, there's been lots of speculation over the last couple of years about the US and the EU sanctioning Russia, but obviously it doesn't really make sense when that is your prime source of palladium, right? Even with the operations in North America. So as far as I'm aware, there aren't any at the moment.
Are we in agreement?
So are we talking sanctions or tariffs? Because definitely agree with there's no tariffs, but I mean I think the sanctions are in place, but palladium specifically no sanctions on palladium. So that's for me 2 different aspects.
Yeah. So there's a difference between no new tariffs,
yes,
but existing sanctions.
Sanctions, yes.
But the sanctions just made it flow to China. Henk, you want to comment? Sorry, Wilma.
There is a bill going through the Congress machine, supported by 3 congressmen. One of them from Montana. They're trying to protect Stillwater, and they're trying to put a ban on Russian palladium imports. It's not sure if it will go through because obviously Trump's relationship with Putin is a bit of a question mark. He's already hinted that maybe we should get a bit easier on Russia with the economic sanctions. So it's going to be quite questionable then if this bill will be successful. But there is something in the pipeline. We're not sure if it's succeeding, but it could be quite disruptive if they succeed in getting that voted through.
Are you happy with?
Well, I mean, but it's,
No, thank you
it's
for crystallizing. It's actually 2 conversations.
So it's
yeah.
not, it's not going through. So at the moment, palladium can flow easily into from Russia into the US.
Yeah, it's a potential, but it's...
It's, I mean, I think the other point to raise is then there's the potential of a PART Act that is maybe being pushed through, which means that auto catalysts or parts of auto catalysts can't flow through the US, and that could have an impact. That's not, it's a Damocles sword hanging over the industry's head, but it's not being passed yet.
Hey, the world's a lekker gemors, hey. I'm so glad I can just commentate and ask questions. There's a question from Bruce Williamson in the remaining 1 minute. What is the current average PGM grams content on ICEs and hybrids? What's the cost on average? I mean, it's still a small component. At the time of Dieselgate, I could not understand why you destroy your brand for $50 or whatever the palladium underloading was.
Right.
How big is it? How big is the loading on cars right now in terms of grams or cost? Henk, anybody?
You see, there's a big difference between the US, Europe, China. So
Yes, there's no simple answer out of this one.
That's why we get paid. And then you have obviously a massive difference if you have to clean up a 6-liter V8 or the 1.5-liter Honda in the US. So average is a relative one.
And the question was about averages, but I hear you.
But
$6.5.
it works out to quite a high number in the US, heavily palladium, a bit more platinum in Europe, but probably 4 or 5 grams order of magnitude. But you have to remember as well, hybrids initially had higher loadings. A lot of that has been optimized now. So hybrids don't necessarily have higher loadings anymore than what original cars were doing. E-revs will have substantially lower loadings. China had a big difference between domestic brands. They were allowed to get away with murder, so their loadings are substantially lower than the Western brands that we've produced in joint ventures. Their export models probably have approximately double the loadings what the domestic numbers are. because they need to be approved for the export market. What you then get, all the numbers normally get calculated based on production in country. So that will help as China starts exporting more and more of its vehicles, it will start to lift loadings because they need to get approved in South America and the rest of the world.
It's a damn complicated answer
And
to
no
a
answer.
damn
Exactly, that's why we
complicated
get
question.
paid.
And that's why we invite you and Wilma and Jason. Jason, finally, to this morning, you don't worry about our GNU, our government is also mad, but you don't worry about that, just the Trump madness. Are you still mostly bullish about the PGM demand, supply demand? Are you standing with your slides that you built yesterday, in other words?
I'll still be bullish on supply, rebounding slightly. I think long term, definitely demand, both for platinum and palladium, maybe a bit more on the palladium side. That's more on the industrial uses, as I think Wilma discussed earlier. So yeah, I'm still bullish. And with the uncertainty around Trump, I think that provides a bit more, actually, a bit more to be bullish about.
Ladies, gentlemen, we are confused at a much higher level now, aren't we? I mean, in very distinct detail as Henk has contributed. This is always a fantastic conversation. The three of you brought different perspectives that overlap beautifully. Thank you very much, as always. Thank you. You will be back, Henk. You were positive enough. We need to break for tea and coffee, I hope, because I need more than just that break. I need a real break. I undertook to our CEOs that I will not ask them the questions that will get them banned from traveling to shithole countries or other countries. So we've deliberately put together a panel to talk about geopolitics. Please come back. That panel precedes our minister's keynote. So I think it's going to be a good session between tea and lunch. See you soon back on time, please. Thank you very much, everybody.